Hello and welcome to Spy Trader, your go-to podcast for all things related to the S&P 500. I'm your host, Benny Bull Market McFly, and it's currently August 12th, 2024, 6 p.m. As always, we're here to break down the latest market news, provide expert analysis, and deliver some actionable trading tips to help you stay ahead of the curve. Let's dive in. First up, let's talk about some key news items affecting the S&P 500. Morgan Stanley recently made headlines by adding three high-quality defensive stocks to its fresh money buy list. This move indicates a shift towards a more conservative investment strategy amidst ongoing macroeconomic uncertainties. Morgan Stanley is expecting the S&P 500 to remain range-bound between 5,000 and 5,400 until the end of the year. The stocks Morgan Stanley is favoring include Public Service Enterprise Group, PED, which has seen an impressive 30.93% increase in value year-to-date, AbbVie, AP20 up 22.3% this year, and Northrop Grumman, trading at $498.32 with an 18.7% potential upside. What's notable here is the focus on stability and strong fundamentals, which these companies exemplify. In other news, the S&P 500 closed flat today as the market eagerly awaits key economic data, including the Consumer Price Index, CPI, and Producer Price Index, PPI, set to be released this week. Investors are on the edge of their seats as these reports will provide crucial insights into inflation and potentially influence the Federal Reserve's future policy decisions. All right, let's get into some analysis and insights. Morgan Stanley's cautious stance is a signal to investors that uncertainty still looms large over the market. The emphasis on defensive stocks like utilities, PEG, healthcare, ABBV, and aerospace and defense suggests a prudent approach. This strategy can provide both stability and modest growth, especially when economic conditions are murky. It's also worthwhile to note that the broader market sentiment remains mixed. The resilience of tech stocks, led by NVIDIA's recent surge, contrasts sharply with the struggles in consumer discretionary sectors like travel, where companies like Expedia and Airbnb are facing slowdowns. Now, let's talk trading recommendations. Given the current landscape, focusing on defensive stocks seems like a wise move. Here are a few picks based on Morgan Stanley's recommendations and our analysis. 1. Public Service Enterprise Group, EG. With a strong return on equity and a stable business model, PEG is a solid bet. Despite its 30.93% increase this year, it still has room for growth with a price target of $78. Utility stocks like PEG are known for their stability and yield, making them ideal in uncertain times. 2. AbbVie, ABB, up 22.43% this year with a target price of $211. AbbVie's robust pipeline and expected growth could provide a good ROI. Considering the defensive nature of healthcare stocks, AbbVie is a great pick for those looking to invest in a stable yet growth-oriented company. 3. Northrop Grumman. This aerospace and defense stock is trading at $498.32 with an 18.7% upside potential. Given its undervaluation and the current geopolitical climate, ENOS could see significant gains. Defense stocks often perform well during volatile periods due to their steady government contracts. To wrap things up, how do finance experts order their stakes? Well, invested. Thanks for tuning in to Spy Trader with me, Benny Bull Market McFly. Remember, the market is a wild ride, but with the right strategies and insights, you can navigate it successfully. Stay informed, stay savvy, and we'll catch you next time for another update. Happy trading.